Welcome to the Daily Business and Finance Show. DEA's marijuana rescheduling and the impact on pot stocks, AMD's Q1 performance, FuboTV's loss of Warner Bros. Discovery Networks, PepsiCo's dividend hike, NBC's big NBA TV rights pitch, Federal Reserve meeting insights, Doves versus Hawks, Starbucks disappointing sales in North America and China, and CVS Health earnings preview, a deep dive into medical costs and long-term outlook. Stay tuned after this short ad break to delve deeper into these headlines. The United States Drug Enforcement Administration is contemplating the reclassification of marijuana as a drug of lesser danger, subject to review by the White House. This potential move could mark a substantial stride towards federal legalization, notwithstanding existing discrepancies with state laws. Recreational use of marijuana is permitted in 24 states and for medicinal purposes in several others. Efforts for federal legalization persist within Congress, backed by extensive public endorsement.
Shares of Advanced Micro Devices experienced a 2.3% decline in after-hours trading, even though the first quarter results aligned with predictions. The company, which specializes in semiconductors, disclosed earnings of 62 cents per share on a revenue totaling $5.47 billion. Revenue from the data center saw an increase by 80%, reaching $2.3 billion, largely due to its AI accelerator and processors. On the other hand, revenues from both gaming and embedded segments witnessed significant drops of 48% and 46%, respectively.
FuboTV, a sports streaming service, has made an announcement that Warner Bros. Discovery Networks have left its platform since the 30th of April. Despite FuboTV's attempts at negotiation and offering market rates, Warner Bros. Discovery did not provide a counteroffer and instead insisted on higher rates. This development comes after an antitrust lawsuit that FuboTV filed against Disney, Fox, and Warner Bros. Discovery earlier in the year.
PepsiCo has declared a rise of 7.1% in its quarterly dividend, which is now $1.355 per share, an increase from the former $1.265. Shareholders registered by June 7th will receive this new dividend on June 28th.
Reports suggest that Comcast's NBC Universal is proposing an annual offer of $2.5 billion for a package of NBA games, thereby competing with Warner Bros. Discovery's TNT. In the meantime, it is anticipated that Disney will shell out approximately $2.6 billion to renew its existing deal, marking an increase from the current annual payment of $1.5 billion. Amazon Prime Video is also reportedly engaged in discussions for securing an NBA streaming deal.
The Federal Open Market Committee is starting a meeting that will span over 2 days, beginning today. Traders are forecasting a high probability, 97% to be exact, of the interest rates remaining unchanged. The anticipation is for the first quarter-point rate reduction to occur in November. Goldman Sachs is projecting milder inflation reports which could potentially postpone further reductions. On the other hand, UBS is predicting that due to more robust data, the initial cut will take place in September 2024.
In the second quarter, Starbucks Corporation experienced a decrease in global comparable store sales by 4%, falling short of the anticipated 1.5% rise. The total revenue also saw a decline of 1.8%, amounting to $8.56 billion. Earnings per share stood at 68 cents, which is lower than last year's figure of 79 cents and below the general consensus of 80 cents per share. Sales in North America decreased by 3%, while international sales saw a more significant drop of 6%. Despite facing these hurdles, Starbucks managed to inaugurate 364 new stores within this quarter and continues to maintain confidence in its long-term strategy.
Stocks in the cannabis industry experienced a significant increase following news that the U.S. Drug Enforcement Administration might downgrade marijuana's classification to a less hazardous substance. This potential change could lead to substantial tax advantages for businesses within the cannabis sector. The proposed alteration, which is based on advice from the Department of Health and Human Services, is currently being evaluated by the White House Office of Management and Budget.
CVS Health is scheduled to release its first quarter earnings on the 1st of May. Market analysts are forecasting a profit of $1.70 per share, which represents a decrease of 22.7% compared to the same period last year. The revenue is expected to be $89.2 billion, marking an increase of 4.6% year-on-year. Investors are particularly interested in the company's remarks regarding medical costs due to alterations in the Medicare Advantage program, as well as potential expansion in the health services sector. And that's it for today on the Daily Business and Finance Show. Stay informed, stay ahead, and most importantly, stay safe. Until next time, I'm Montgomery Jones.
And I'm Amalia Dupre. It's been a pleasure until we meet again tomorrow.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.